The short answer: refinancing is not bad, but it is a mathematical trade-off. Saving $250 or more on your monthly mortgage payment can significantly improve your household cash flow. Yet it only makes financial sense if your break-even point occurs before you plan to sell the home, and if the total interest paid over the life of the loan doesn't outweigh your monthly savings. In today's shifting real estate market, many homeowners are bombarded with offers to lower their monthly payments. At Maya Team Inc., we believe in empowering you with the data you need to make an informed decision rather than a reactive one. Whether you are looking into a refinanciamiento or exploring new préstamos hipotecarios, understanding the nuances of the 2026 lending landscape is vital. What is mortgage refinancing? Before diving into the numbers, let's establish a clear foundation. Mortgage refinancing is the process of replacing your existing home loan with a new one. This new loan typically comes with different terms, usually a different interest rate, a different loan duration, or a different loan type. Homeowners generally pursue a refinance for three main reasons: to lower the interest rate, reducing the cost of borrowing; to lower the monthly payment, improving monthly cash flow; to tap into equity, a cash-out refinance to fund home improvements or consolidate high-interest debt. Is saving $250 a month always a win? On the surface, keeping an extra $250 in your pocket every month sounds like a no-brainer. That is $3,000 a year that could go toward your children's education, an emergency fund, or retirement investments. However, as professional consultants, we must look at the all-in cost, the reality of closing costs. Refinancing isn't free. Just like when you first bought your home, a refinance involves closing costs. These typically range from 2% to 5% of the loan amount. If your loan balance is $400,000, your closing costs could be anywhere from $8,000 to $20,000. If you are saving $250 a month, but paid $15,000 to get that saving, it will take you 60 months just to get back to zero. If you move or refinance again in 4 years, you actually lost money. How to calculate your break-even point? To determine if a refinance is a smart move for you, you must calculate your break-even point. This is the moment when your monthly savings have officially paid for the cost of the loan. The formula is total closing costs divided by monthly savings equals months to break even. Example, scenario. Current monthly payment, $2,800. New monthly payment, $2,550. Monthly savings, $250. Total closing costs, $5,000. Calculation. $5,000 of closing costs divided by $250 savings equals 20 months. In this scenario, if you plan to stay in your home for more than 20 months, the refinance is a net positive for your monthly budget. If you think you might sell the house next summer, you should avoid the refinance. The hidden risks: don't reset the clock blindly. One of the most common mistakes we see at Maya Team Inc. is the term trap. Imagine you have been paying off your 30-year mortgage for 7 years. You have 23 years left. To get that $250 per month saving, a lender might offer you a brand new 30-year loan. While your monthly payment drops, you have just added 7 years of interest back onto your life. Why the total interest matters. Even if your interest rate is lower, paying interest for 37 years total, 7 old years plus 30 new years, can often cost you more in the long run than sticking with your current 23 years at a slightly higher rate. Pro tip: if you refinance to lower your rate, try to choose a shorter term, like a 20-year or 15-year mortgage, or continue making the same payment you were making before. This allows the $250 savings to go directly toward your principal, helping you pay off the house years ahead of schedule. 5 reasons refinancing makes sense in 2026. Eliminating private mortgage insurance. If your home value has increased significantly, you may now have more than 20% equity. Refinancing can remove PMI, which often accounts for a large portion of that $250 plus monthly saving. Consolidating high-interest debt. If you are carrying credit card debt at 22% interest, rolling that debt into a mortgage at a much lower rate can save you thousands in interest charges, even if your mortgage rate itself is slightly higher than your original one. Converting an ARM to a fixed rate. If you currently have an adjustable rate mortgage and are worried about future market volatility, locking in a fixed rate provides peace of mind and budget stability. Shortening the loan term. Moving from a 30-year to a 15-year mortgage will likely increase your monthly payment, but it will save you tens of thousands of dollars in interest over time. Funding necessary home improvements. Using a cash-out refinance to repair a roof or update an HVAC system can preserve the value of your asset and prevent more costly repairs down the road. Your refinance checklist, are you ready? Credit score. Most lenders look for a score of 620 or higher for conventional loans, though FHA options are available for lower scores. Debt-to-income ratio. Your total monthly debts should ideally be below 43% of your gross monthly income. Equity. You generally need at least 5% to 20% equity in the home, depending on the loan program. Documentation. Have your last 2 years of tax returns, 30 days of pay stubs, and 2 months of bank statements ready. The Maya Team Inc. perspective. At Maya Team Inc., led by Roni Velasquez and Mona Botros, we don't just look at a refinance as a transaction. We look at it as a piece of your overall financial puzzle. With over 22 years of experience and over 3,000 transactions closed, we have seen every type of market cycle. Our goal is to ensure that every dollar you save is a dollar that actually stays in your pocket. Refinancing can be a powerful tool for building wealth and securing your family's future, but it must be done with precision. If the math doesn't work, we will be the first to tell you. Ready to see the real numbers? Don't guess when it comes to your home's equity. Let us run a personalized analysis for you. We can compare your current loan against today's best available programs to see if that $250 per month saving is a true win or a hidden cost. Contact us today to get started. Follow us for more tips. Stay updated on the latest in real estate and mortgage education by joining our online community. Share this post. If you found this breakdown helpful, share it with a friend who might be thinking about refinancing. Let's make sure our community makes smart, data-driven financial moves.